Hey guys, welcome back to another episode of the Dean Clark Group podcast. So this week we have seen Hoboken and downtown Jersey City and the Heights actually take the lead with the number of new listings. It's now we're approaching, in the last week alone, just in these two areas, you have over 250 new active condo and single family properties hitting the market. So you're definitely seeing the flow of that coming through. Contracts are definitely up a little bit, not as much as I would like to see, but the condos are, the inventory is definitely rising fast in these areas. And this is why I've been pressing hard and putting a full court press on the majority of my clients to get their properties listed as fast as possible to beat the rush that we're going to experience once people get more comfortable with what they're buying out in the suburb areas of Jersey or wherever they're going to be going. So actually, it's funny too, like a lot of my clients have also been looking at Florida, North Carolina. I mean, we're not just talking like moving out in the suburbs of Jersey. We're talking in all different markets of that as well. So, I think a lot of that has to do with the fact that, we're seeing people just coming from the city and they're either skipping this area of the Gold Coast, like Hoboken up through Edgewater and Jersey City, and they're going right to the suburbs, and about 25 to 30% of that market. So picture this, right? You have 30%, let's say, a third of the New York City buying pool that's no longer looking for condos or even attempting to buy anything in the city or Brooklyn or Queens, and they're coming over to Westchester, Connecticut, North Carolina, Florida, all these different areas. And what we're seeing in this immediate area, Hoboken, Jersey City, up to Edgewater, it's about a 25% of that third is coming to our area. So it's pretty good numbers, but it's not like the majority of what we're seeing. 75% are going in other places looking for more land. A lot of clients are looking just for like an acres and just looking for like space. And for instance, I have a property right now in Ridgefield, of all places, single family house. It's great, but the problem is that there's no backyard, and that seems to be the consistent feedback. Literally, we have no huge house, beautiful, gorgeous house, but it lacks a backyard, and we're having a hard time really getting a number that's justifiable to the owner to make sense of the deal. And that's happening a lot. So there's certain things, and that's why you have to factor in the COVID, the land grab. So even like today, I met with someone in North Bergen, beautiful property, single family, going to be going to the market next week at some point. And, she has a good amount of space. It's all paved, which is fine, and it has parking and everything, but it's all about the lack of backyard space is hindering that. So whatever she thought it was, you could take off about 5%. So if you think, hey, the comps are coming in the area, let's say at like 600,000, okay, fine, take 5% off and take that 30,000, and then you can just cut away for having the lack of backyard. Price yourself more aggressively under that 575 mark for a number of reasons. And this is what I'm advising to a lot of my sellers right now, which is number one, is you want to price it between $25,000 and $50,000 increments. The reason is because the Zillow and Trulia algorithms do query searches, and the majority of if you go and actually study the data proves that people look in increments of $25,000 to $50,000, and the algorithms are getting more and more better at assessing that. So when a new property hits the market, or there's a price change in that area, it's hitting those people a lot faster than it would if you're like going from, let's say, 900,000 to 885 or even 865. If you're going to go through there, you might as well go all the way down to 850 to reach the new buyer pool that's out there. So look, it doesn't mean that things aren't happening. As a matter of fact, we had one of our best months in June, and also so far in July, a number of new listings coming through, a lot of action on a lot of them. But, the condo market's a little bit, stagnant. Single family market, again, is still going high as long as you have, like I said, a nice sized backyard space that has grass and greenery, and you can really showcase that. Anything with grass and green, just some sort of outside space, is going and flying high. So that's fantastic. And we're getting a resurgence of 2 families and 3 families right now. So as long as the laws are not prohibitive to you to buy, for instance, like rent control, like in Hoboken or in Union City, the politics are not the best for investors right now. But if you go to places like Jersey City, or Edgewater, Cliffside Park, and down south, even to like North Bergen areas, we're getting a lot of good multifamily action, depending upon how it's set up. So, yes, overall, I'm pretty positive right now. The data is showing that the future is going to look going to look like we're going to end this nice little run probably closer to like September, Labor Day timeframe, and it's really going to set in, I think, at that point to see, okay, where does the market stand right now? Not to say that deals aren't going to get done. It's just going to be a whole different marketplace going into October and then the new pretty big election cycle that we're all facing, and just the overall uncertainty with COVID and not having a vaccine and all that. So, but that's been the word on the street from buyers and from sellers alike as they're trying to figure out their plans to move. So, yeah, and of course, any questions that come up, I'm happy to discuss. Give me a call. And you can reach me on 201-240-8319. Shoot me a text if you just want to have a quick question to throw at me, or shoot me an email, dean@deanclarkgroup.com. Have a great day. Stay safe. Talk to you next week.